Hello and welcome to Money, Markets and More with me, Dominic Frisby, coming to you today from Frankfurt on the banks of the River Main. And today we are talking about the most important price in the world. Before getting started, I just wanted a flag that kisses on a postcard, won silver at the New York Festival's Radio Awards. For Best Serialised Podcast, we beat off competition from major production houses, including Lionsgate, the BBC, Media House, which is Ireland's largest media group. So that's pretty good. And if you haven't listened already, load it onto your favourite podcast app and play it while you're cooking, while you're walking, while you're driving, while you're ironing. This podcast with music about two boys in World War II will make your life better. How about that for a sales pitch? So to today's piece. Now, I've said it before, and I will say it again. The US dollar is the most important price in the world. It's the global reserve currency. It's the international money of default. Global commerce thinks in dollars. It's the pricing mechanism for essential materials, oil, copper, wheat, energy, metal, food, in other words. They're all traded in US dollars. The majority of international debt, and there is even more debt in the world than there is essential material, is traded in dollars. The IMF thinks in dollars. It's a determinant of international capital flows. Is capital flowing from or to the United States, the largest economy in the world? Just. Looks like the police are after me. Now, I can get all idealistic and say the world will be a better place if gold had this role. It should. It's independent, it gives no nation or government exorbitant privilege, it lasts longer, it's got a proven history, it's a better unit of account, its purchasing power doesn't get steadily eroded, new gold supply matches population growth, all that kind of stuff. Even Bitcoin could work. It's independent. But the reality is that the US has got the gig, largely by having such a strong army. And also for the fact that so many around the world trust in America. Now, I would argue that trust is not what it was, it's fading, but when push comes to shove, it's still got the gig. And a strong US dollar should be good for international stability, and thus good for America's reputation. But the US government likes to print, spend, and then export the inflation and the debasement. You just need to look at what it does to know what it prioritises. And when the dollar is weak, asset prices rise. And the policy-making world sure does love a bit of asset price inflation. Borrowing's cheap, house prices go up, stock prices go up, bond prices go up, energy and metal prices go up. The party keeps on rocking. Everybody feels wealthy. But when the dollar is strong, the world gets the jitters. It starts to think that the asset price bubble that's been inflating since August the 15th, 1971, might be about to pop. Now, those in charge may talk tough, they wear smart, plain suits and look respectable, but then they usually start printing again. Here's the thing, though. The dollar's just hit an inflection point. It comes to them every now and then. And when it does, it pays to take heed. And despite the experience of day traders where prices flicker at you and fortunes are made and lost in tiny fluctuations, if you zoom out, the dollar tends to trend for months at a time, if not years. The US dollar index, which is the dollar versus the currencies of its major trading partners, it hit a high in 1985. It got so high, in fact, that the G5 nations signed the Plaza Accord to get the price back down again. The eventual low didn't come until 1992, 7 years later. This wasn't a one-directional thing, except for the first move. There were counter-trend rallies that lasted for several months. In fact, the process of making a low lasted from 1988 to 1995. It made a low, rallied a bit, made another low, and so on. It took time, in other words, 7 years. But then, from 1995, the dollar rallied with the usual drawn-out counter-trend moves, all the way to 2001. With the dot-com bust, 9/11, the Iraq War and all the rest of it, the dollar then saw 7 years of bear market. In 2008 it made another low. The price was 71. It rallied for several months, then declined for several months, eventually retesting the low in 2011. So the bull trend, the bear trend, and the process of making lows and highs can each take many years. And if you, as an investor, trader, portfolio manager, were able to catch these trends and be in and out of the market at the right time, you would have been able to magnify your returns many times. The low in 2011 was 72, and many years of bull market with the usual drawn-out counter-trend moves followed, before the dollar index eventually peaked in September last year at 114. When it changes direction, this lumbering beast likes to put in double tops and double bottoms, more than any asset I can think of, sometimes triple tops and bottoms. Reaches a level, then retests it, and then sometimes retests it again. Here's the thing, it might be putting in one such double bottom now. The pain, especially if commodity prices, has been relieved somewhat these last few months as the US dollar has come off. This last month has felt, well, let's say March felt particularly good with gold and silver both very strong. But April I should say, but the dollar index hit a low in 101 in early February. It rallied for a few weeks, then came off again. It is retesting that low now. Does the US dollar now rally? I have to say it would be quite normal behaviour for it to do that for me. I've heard a lot of excitement about silver, for example. You know my cynicism about silver. Too much excitement and euphoria usually means declines are upon us. In fact, the last few days I've actually taken out a small short against silver in my spread betting account. Small, tiny. I'm not forecasting the beginning or the end of a major dollar cycle, but I do think, assuming 100 on the US dollar index holds, we might see a reversal in the dollar that could last several weeks or months. And it comes, interestingly, just as gold is retesting its highs. Could gold be putting in a double top? It's all about that 100, 101 level. Thank you very much for watching. I'll be back with another video very soon. Please subscribe to the channel. If you're interested in buying gold or silver, my recommended bullion dealer in the UK is the Pure Gold Company. I'll put a link in the description, and that is all. Until next time, goodbye.